This is Damon Stevens with FinWealth Builders. This is Sunday, May 8th, 2022, and this is a market prep for this upcoming week as we recap last week and take a look at what our opportunities before us. So let's get right into it, take a look at what's going on. We're not financial advisors, but we are definitely here to help and to share with you at least what we're looking at, how we're seeing the market, and how we're trading the market. And if you'd like to join us, please go to finwealthlive.com. There you'll see a link to our free training and as well as a free Discord, where in the morning we post our trades before we even open the day up. So definitely join us, take advantage of that free service. And if you ever want to join us live, then just look at our memberships and you can participate with us live in the morning as well. So let's get right into it. Look at the market. So on Friday, we closed Dow Jones down 0.3%. NASDAQ closed on Friday down 1.4%, and S&P 500 down 0.57%. So the bears continue to bring us down lower. You can always tell if the bears are in control when your daily charts go away and you have to go to weekly charts to show anything above the moving averages. And I'll show you a little chart trick here as we get into it. But you see here that definitely we were mixed and pretty well flat. Energy continues to dominate the sectors here as far as, being bullish. Money continues to flow in there as money's flown out of the other areas. And as we look at the chart, you'll kind of see kind of what's going on, but energy is definitely dominating. And once there's a turnaround in the market and money starts to flow back in, that energy will get sucked out. So just be aware of that. So let's see what could be affecting this week as we come up. So this is the calendar as far as what events are coming up. So on Monday, you can see that we hear about wholesale inventories and 1 year inflation and 3 year inflation expectations. So if the market's already kind of built in, that there's definitely something. There's definitely been a downturn, right? And inflation definitely is there. So the question is there a surprise here? So on Monday, we could see some volatility on Monday if depending on what the expectations are in the market, what's already built into the market price versus what kind of information comes out. So Tuesday, real house debt comes out. So there could be economic data. So, it could be affected on Tuesday. We'll see, but definitely Monday, watch out for Monday. Wednesday, watch out. You have core CPI, consumer price index information coming out. That could definitely create some volatility and some swings in both directions on Wednesday. Thursday, we have initial jobless claims as well. And so that could be affected. So big week, really, this week coming up here as far as, things that could swing the market around a little bit. But definitely the bears are still in control. And that'll be obviously as we get into the charts. Looking at earnings coming up here this next week. It's not as heavy as a week, at least for me. Upstart on Monday, SoFi, Roblox, and Oxy on Tuesday. And then on Wednesday we have Walt Disney and Rivian, and then on Thursday Coinbase. But so real light week, but that's kind of what's kind of rounding up this next week here as far as the players that I'm looking at on earnings. So we'll see what they do, see how this affects, the market, or at least the opportunities that we have in the market. So Oxy, so let's look at energy. So Oxy just continues to kill it, just new highs. We're on this daily chart, new highs, looking for a continuation play from here. Our next play up here is probably going to be around the $73 to $75 range is the next goal on Oxy as far as seeing if we can continue this rally going up here. So again, looking for a continuation here. We're sitting around 65. So really the next goal, really would get towards that $70. Could we see a pullback? It's possible, but market's shown that it continues to be strong. So we'll see how this week goes. Exxon, again, we're tiny here for March 7th. We were at 91.51. We're at 91.69. So we're above the highs here, continuing to roll. So we'll see next play up here off this support line really is up towards getting towards 98 to 100 if this rally continues on Exxon. Chevron, Back here, March of 2022, so 174.76. We had 174.54, so we're kind of coming right up to this resistance area. Probably a big resistance. I could expect maybe a little bit of a reaction back unless we blow through it. So we're right now 70.69, looking for a play up on Chevron up to this resistance area of 74.54. So it's Chevron, if you're looking at a short list this week and you want a short play, in a positive direction, CVX to 174.50 would be one to add to your list. ALB, this is on daily chart as well, still on daily charts. So these are the stocks that are moving the market right now. ALB, you can see here the high is 291. We're sitting here at 242. We're kind of sitting in this area of resistance, 242 right here, 253, 248. So we got some resistance right in this section here. If we get through this 250 area, we got a nice run up here towards 290. So looking to see if we can get, support here. We may kind of bounce around here. This may become a little bit of a range. So look for, a breakout of 250. It would be the goal to hit towards 290 on ALB. So just another one we're really kind of keeping a close eye on. Definitely get some intraday playing here on this stock, but we really got to get 250 if we want to break out here. AMD. So now we have to go to weekly charts, just because daily charts are all below the 200. And I'll show you a little bit of a trick. You want to understand, if a stock is really bearish or bullish in trading view. If you hit Alt I, it'll invert the chart. So right now you can see this definitely looks very bearish. And if you think, well, no, I think it looks, looks like the bulls are there. Well, invert the chart with a Control I or Alt I, and that inverts the chart. Now, if your chart looks all of a sudden bullish instead of bearish, that's a good indicator right there. And so you can see on AMD, you can see that this looks very bullish. It looks like it's coming up, curling off of the 50 moving average. Then when it curls off and bounces and finds support, it's going to rally up here if it was bullish. But we are bearish, which means this could roll up and then down. So just be aware of that we could come down, towards this 73.49, which would be the next area on a weekly time frame if we want to find support down on the 200. If we can hold the 50 here on the weekly and break up, we could break up going towards the 50 or 100. Definitely be resistance. They're all curling down here. So that means the market's going to be harder and harder to break through, at least for AMD. So that's where AMD is at, looking for support here, 95.50 for a breakout towards the 50 and the 20. We break below 95, look for us to go down to towards 73. Apple, same thing. So if you, again, this is just a little trick for you. So Alt I, if you want to view, if it looks like a pattern that's bullish when you reverse your chart, more likely that means you have more downside possible here. So and we're sitting here right above 50. You can see it hit the 50, tagged off there and bounced off, but that is very weak. So if we break below 54, look for a play down here to 49, or even clear down here to the next moving average down 135. So we have a long way that Apple could fall if it breaks this support line here on the 50. If it gets back above the 20 here at 163.50, then maybe we can rally up here. But again, still hovering on the bottom of this 50. But it's been support before, back in early March. So we'll see if it can hold again and give us a nice little bounce. So and we talked about possible relief rally. I think there's possible one this week if there's not additional bad news, because the market should have a lot of things built in. The market's been kind of beaten down. But if the news is bad that comes out, then we definitely could start to break some of these support levels and head even further south. Tesla on a weekly chart, again, sitting right on the 50. So you can see a lot of these are right on critical support. And if we break it this week, then we could possibly have a continuation play down to the downside in May, and possibly beyond. if we really start to break this down. So just keep an eye on it. So we can get, if we can hold this line, look to work back towards 932. If we break 859.80 area, then look for a play down, down towards 800 or even close to 700 if it gets bad enough. So Nvidia, you can see here that Nvidia is right here on the 100 moving average. It's been there for 2 days. If we break 188, look for a play possibly down to 140. If we can bounce off of here, you really got to get back above 200 if we want to start, running again on Nvidia. So on a weekly chart, again, critical support, break it, we're head towards the 200 on a weekly chart. So just something to be aware of. Netflix, sitting here on the 200 on a monthly chart now. So now we're monthly because weeklies on Netflix don't show you above any of the moving averages. And if you were to invert this chart on a monthly basis, you can see here, it looks like we're trying to break out, above the 200 moving average, a breakout above the top here. And look at this, it looks like just a nice bullish run when you're inverted and you're looking at it from a different perspective. So that means, we've had a nice strong play to the downside. So we're holding that 200. If we break that 200 at 181, then we could come down a lot lower, and we could. I mean, this is kind of where the stock broke out here. This is kind of the beginning of Netflix, and so if you look at it, we're coming down from $700 down to 180, and so that's a huge drop in this stock. So it's really getting beaten down. That's why, my last video that I posted and on Twitter, I said, hey, if you're investing in 401ks, things like that, some people are asking me, hey, should I stop investing my 401k? And I'm like, no, we're discounted. The market is so discounted right now. As further could go, but if you're getting matches on your 401ks, if you can move things into your IRA, your Roth IRAs accounts, why not? Especially, those who are, saying, hey, I'd like to save up and buy a house, but I can't afford a house. Well, put your money somewhere where it's going to grow long term. That's only going to benefit you down the road. So, I mean, just look at these stocks. They're just, you can't get more on sale on some of these stocks. So just something to be aware of. Facebook, again, now we have to we're on a monthly chart. We're down almost to the 100 on a monthly chart. So Facebook has just been beaten up as well. You see here, sitting here around, 203 right now. We're just sitting above, this is now four trading months trying to find support here off the 100 moving average. So if we break the 177 area, we could be coming down, next support area would be around, this 115, even down to 100. So just something to be aware of. Hopefully we can hold here. You see it, we're just kind of consolidating here for now 4 months down here. So we'll see if this is a nice critical area of support that we can find, and maybe at some point we can get a rally off of Facebook. But Facebook definitely 4 months down in this lower range. BABA is another one on a monthly chart, and it's still below everything. On a monthly chart, you can see that BABA right here in 2015 is where BABA began to be played on the market, and the lowest low for BABA is 57.20. That back in 2015 when it first opened up on the market, and we're at 90 right here. So we're hovering right around the range that BABA opened up on the stock market. So again, BABA is down at the bottom, right at the beginning, 2015 numbers. So hopefully you had a chance to ride this down rather than have bought up at 319 and had all your money flushed out down to $90. So hopefully you've been shorting it or you just got out at these highs and you've been able to keep your capital so you can start to reinvest down here at the bottom where some of these companies are at. So just something to be aware of. It's just important to see, trying to give you a different perspective of the market, not trying to scare you, just trying to show you, that we got some deep discounts. And yeah, things have been beaten up. They could continue to get beat up even further, but some of these, there's not a lot further to go. on these. And so, I mean, if you're looking at the market, turn around at some point, maybe it doesn't turn around till the end of the summer. Typically, the end of the year is a nice rally. I mean, you could have some huge rallies here based on kind of where prices have been beaten down to. So just something to be aware of on a lot of these stocks that we watch and we trade. And yeah, we play downside and the upside. We do calls and puts, and we do option trading as well. There's lots of different ways to play this market. You can, if you're just doing 401ks and things like that, a little bit harder to do anything other than just keep putting money in and buying lower and lower as it comes down, and wait for it to ride back up unless you're moving your money around. But if you're a trader, you're looking at when the market's going down, you're trading, you're shorting the market on the way down, and when it's going up, you're trading it going up. And you probably start adding these back into your long-term portfolio, which is what we're looking at. Is some of these that have been beaten up, put them in your long-term portfolios, and then when they rise, they're going to rise probably pretty quick. And when they do, your portfolio is going to change. I mean, sometimes this is the wealth building opportunities that you hardly get ever in your lifetime. So something to be aware of. Just want to make sure that you're educated on these stocks here. And definitely, if you like these videos, if they're helping you out, definitely continue to subscribe. Definitely like our videos, and that way we can continue to bring this content to you. We're doing this for us and our own stocks and to help people that we know, but also trying to help everybody that we don't know how to navigate the market, to make money, and to take care of the things that you need to. So looking at the 10-year yield here, and I brought this up on a monthly chart so you can see. So this is 2014, and this is 2019, and this is 2022, and you can see that we're right here at the highs. So you can see that we're kind of right here at the highs. So this could be a resistance area right here. This is kind of the top, but this is where we're at. We're kind of at the peak when it comes to these bonds. Where we're at now, could we go a lot higher? Most definitely can. We most definitely can, but just want to show you that we are elevated, and that we've been here a few times before, but we're back again on the bonds. So something to be aware of. On the dollar, this is 2017. This is June 2020. April 2020, and then now we're here again, 2022. So you can see here that we're kind of right at that top of the dollar as well on this inflation area. So just something to be aware of on that dollar. Energy, all-time highs on this index. So we're sitting 82.92. Next level up really is to tag here 84 area, and then above that would be going up here towards $90. We'll see is if the stocks continue to get beat up and money keeps flowing into energy, we could definitely see those higher levels. But for right now, the next resistance area really is around this 83.50 area. If we do pull back, we should have support here around this 81. If we break this one, we have ways to come down here back to the 20, which is 78. So we're really elevated. And typically, you're going to either see this have to climb up here over time to catch up, or this is going to come down, or they might do both. You might have this one start to rise up here and this one back off and have a pullback. And if we have a pullback in energy, you're going to see a little bit of, at least a little initial spike, probably in healthcare area, the tech area for sure. Some of the other areas will kind of bounce a little bit, but those could be just short-term relief rallies. As long as the bears continue to control this market, just know that there could be more downside on those areas. On the VIX, spiking. You can see, on this weekly chart. Again, on a weekly chart, you can see all this volatility we had. Both sides up towards the highs and also clear down to the 20. So we're sitting here kind of right down here towards the middle. So it'll be interesting this week. Do we spike back up here towards this 39, and try to hit this peak again that we had back in January, or are we going to be able to pull back here, and have a relief rally? So we're kind of right in the middle, which means, either way could go. So, and we have a lot of data coming out that could affect it. So this week's pretty important week. So on the SPY, you can see here, this is a weekly chart, because it won't. We don't have anything positive on a daily chart now. We're below all the moving averages. But you see here on a weekly chart, we're just here. We bounced off of the 100 moving average around this 405 area and found support above that. Now, if we do break below this, then we kind of have this little gap area here at the bottom. So now, maybe 405 is support. Maybe if we break that, then, it could be 404, maybe even 400. We break 400, then the next kind of grouping here where we may get support would be around close to 390. And below that, the 200 is clear down here at 361, 360 area. So we really got to hold this area. If we can hold this area, then maybe we can bounce off of here. Maybe we get a couple relief rallies, try to get back above here, back towards the 430 area. But if not, if we break this area, we could come down a lot lower. So just something to be aware of. This is really a critical part right now. And now on this weekly chart, should make sure we can hold the support and move up. Triple Qs, same here. This is a weekly chart. We're sitting here below the 50, or the 100 moving average and the 200. We're right between it on a weekly chart. So we're continuing to see weakness on the triple Qs, even weaker than the SPY. So if we can't get, support down here, maybe it's around, 295 area. You see 300 was kind of an area where, we had resistance before. So that becomes support. Bounced up, hit it again, pull back down, and then consolidated and broke out. So this should be a good strong area down here, this 295 area for support. If we're coming down to it, if we do break that, then we could be coming down to 274, which is down at the 200. Semiconductors on a weekly chart, again, just sitting here right under the 100. We've spent now, 2 weeks below that, just trying to get above there. So that is weak. That means we could possibly come down here, maybe test 214 area, or even 191 down here at the 200-day moving average on a weekly chart. So definitely semiconductors are trying to get above it, but still showing some weakness here. So we'll see how this next week plays out. But if we can't hold this or break above and hold above the 100 moving average on the weekly chart, we may be coming down here and testing some of these lower lows. IWM weekly chart again, just above the 200. So we're coming down here to 179. We break 179, 166 would be the next level down. And we'd be below all the moving averages on a weekly. So that means we'd be moving to a monthly chart. So again, continued weakness on IWM. Really look for 179 to be a support and possible bounce. And if we do bounce, we may only go as high as like 187, and then we may curl back down again. This has been an area here you can see where we've came down to support and tagged it many times. So now that we're below it, that's going to be all resistance above that to try to break up through. So that's probably not going to be very easy. So just something to be aware of on the Russell 2000, which is our small caps. On XLV weekly chart, you see here, right, sitting here on the 50-day moving average. So on the healthcare sector, so looking to hold here. If we break below the 50, then we could be coming down here to 123.67 or down to the 100 moving average around 121. So hopefully we can hold this area, bounce up. If we do, the 20 is going to be resistance here, 133.31. So there's something to be aware of. We could sandwich in here. You see that we've been sandwiched between the 20 and the 50 moving average several weeks. So now that we kind of bounced up and failed and came back down into this range, we could be range bound again, as we have in the past. So look for support to be around 129 and resistance to be at 133. If we do bounce back and forth, there's still plays. I mean, if you wanted to play this on a weekly basis or day trading it, you could do that as well. But just something to be aware of. We got to break out above 133 if we want to run. Gold. Just consolidating here. You can see between on the daily chart. Go back to daily. So daily means we're still, still have some type of bullish momentum here possibly. But gold is weaker than it's been. So we're still, sitting here above the 200 and just kind of consolidating down here. If we break below 1859, we'll, start to be more bearish. But if we break above this 1890, then maybe we take another run at some highs here. But for right now, gold's just kind of consolidating here for several weeks. Bitcoin kind of in this range here. It's below the 100 moving average on a weekly chart again, so very bearish. And the 200s down here, this 2700. But there's support here. You can see here this 32,950. That's been a nice grouping here of support, and it was a good nice grouping here back here in June of 2021 as support. So this nice range here for several weeks, it was support. So, and it was support again back here in January. So we're here there again. So this hopefully will hold us above this 33,000 level. If we do break it, look to come down to 28,000, 27,000. That should be, good support. Bitcoin's gotten beat up quite a bit as well. So, definitely look for an area of support here and hopefully get a rally off of that and a bounce. Ethereum, you're going to follow the same pattern as Bitcoin. So you can see here coming down here towards this 100. So there should be support around 23.45. If not, you can see down here last time we were at 21.59. Pull back here back in July 2021. Have a nice little grouping here as well of support resistance areas. So this should hopefully help it if we do happen to break that 100 moving average. But we could become range bound in here as well between the 50 and the 100. You can see that we had several weeks that way. So looking for a bounce off here, hopefully support here around 2366 area. If we can get it back above 2926 or this 3000 area, there's a chance to rally, but I don't see it happening unless something turns around. I don't see that happening anytime soon, at least in the next few weeks. So that's possible, but right now, just look for some consolidation and some plays between those ranges. Algo, this is a little crypto. Curled up here. I was looking for it to curl up here and start to head back out and break through some of these areas that you can see that it hit the 20. This is on a daily chart. So we curled up here, tried to break through that 20 for a few days, kind of failed, got above the 50-day moving average. Tried that a couple times and we failed. So we're sandwiched between the 20 and the 50. So look for a breakout of, above 75 for a continuation play up towards, 86. If we break this, look for, possible short opportunity, from 69 down to 53. If we do fail and come down, Bitcoin comes down lower. So that's what we're looking at on cryptos. That's what we're looking at our stocks, our small caps, and other things that are going on in the market. Definitely a lot of important data coming out, including starting Monday. So be prepared for swings in both directions. We're at critical support, so you could get a little bit of bounce and a relief rally this week. But don't expect it to be long-term at this point, not unless things were to really come and turn around, which I don't see it happening anytime soon. We could see some, good bounces in the market, but I don't think we're going to go to become a bull market anytime soon. So just something to be aware of. That's my own opinion. That's how we're trading it right now. And if something changes and shows us it's different, then we'll trade it and we'll change our direction. But right now, the plays are more down towards the bear side of it, the market, with some relief rallies along the way. So we'll be posting out our numbers on Monday morning on our Discord. So definitely join us and definitely share with us in our trading so that we can work together to earn money and make money in this market, because there's opportunities every day. Everybody have a great rest of the weekend, great night. Happy Mother's Day to those mothers out there. And we will talk Monday night and plan out our day for next Tuesday, for this Tuesday. Everybody take care.